Okay, traders, we're looking at the US 500. This is going to help us determine where things are at in terms of, well, stock markets, the indices, and the currency markets, gold. Okay, what we see here and how this plays out will impact everything across the board. And at the moment, this is looking a little precarious. I've marked up this previous monthly range. I want to go out and show you something. If we go to a weekly, possibly the weekly, well, yeah, the weekly, okay. See how this has rallied and it's way overextended. Every now and again, it's going to correct as it did back here. Okay, and you'll see periodic corrections, all right, as time goes by. Well, we've had a little bit of a pullback up in here, but you know, when it gets overextended like this, you want to be really, really careful. This is going to, as I said, it's going to impact everything. Now, we have a look at the daily. What I'm seeing here is this. All right, let's just do that. We could actually probably go to the weekly, guys. Just want to point something out. Let's just open up these candles a bit. All right, that'll do. Just going to grab the pencil. See how this rallied initially, and you can see the strength of the rallies, and then it starts to lean over, pulls back, all right, lower high, and it's just looking a little bit sad at the moment, right? You've got a lack of momentum, a lack of, like, in comparison to where it kicked off earlier on, right? So there's definitely, you know, around the top here, you can see potentially a bit of a topping. And look at this candle, okay? This pin bar, this topping pin bar here. So these pin bars are telling us that, and it's got one here as well, that there's definitely downward pressure going on here. You got to take notice of these pin bars, like when a pin bar kicks in. Look at the pin bars above the candles. Pin bars below the candles here, okay? It's pushing it up, holding up. This is the weekly. Let's have a look at this on the daily and get a bit closer to it. Got to take notice of these candles. What do we got? Yeah, well, okay. We had this one, red candle with a big pin bar under, but these pin bars are failing to hold it up. So I think we need to be a little bit careful at the moment. So if we pick up the volume profile, I want to look at where institutional levels are mainly stacking up. Okay, let's just do this. So this volume profile is picking up traded volume. Actually, we're right on the point of control, this red line. So this is a major institutional level, right? This is where big money, smart money, is focused. This is where most of their business has been done, through these levels here. Look how price is respected and, you know, moved around this level. So I think this is a really important level here. It's a double bottom. Okay, when you look at this previous candle, we've come down to it to retest this level, this low. Now it's only early, like it's early in the year. So what we're getting is this is the monthly range that I marked up here last month, and the yearly last year, the yearly high, right? You could mark that up through there, and down here somewhere there's the yearly low, okay? So we'll just throw that down there. Well, we could quickly go back. So I want to have a look and see, or June, July, hang on a sec, 2026, okay. We'll just take this back and we'll just pick up last year. Where are we? 2025, there it is, right? So just pull it across, down we go, right? Oh, look at this, okay. All right, that's 2025, the yearly candle. So we opened, we ran under, and early in the year, last year, okay, that was February, down it went. And what this does is it flushes out all this, liquidity under here, okay, and it flushes out overextended, leveraged traders, investors, right? They get hit. And this is liquidity that big money can then use to pair their orders with their yearly intention to, rally the market, right? So we need to just be careful, because now we're January, February. Are we going to see a pullback? Okay, consider this yearly candle. We've got the last year, the open here, low, the high, and let's just go to December, January. Okay, January, December. Okay, that was last year. Okay, that's last year's close. All right, and the high, last year's high was actually, yeah, well, it actually pushed up, didn't it? Pushed up into there. All right, so precisely we're looking at a candle here. Okay, we could close it up a little bit, right? That's a yearly candle. Okay, it opens, it runs to the low. It's a really big bullish wick, right? Yearly candle, and then you open here, the low, the high, and then a pull back into the close. So that's what we had last year. That's quite a bullish candle. So now my question is, we're opening into this current year. How far back does this retrace? If this is going to be a bullish year, all right. So let's just find the open. January, okay, February, January. Hang on, December, Jan. All right, that looks like the open. So we're just going to check out this candle. If this is going to be a bullish candle for the year, well, actually, yeah, it should be level with the other candle, the close. All right, so this is the current year open. This is the last year close, and we had a little bit of a wick up. So what you want to consider is when the market opens, we get a candle formation. So the open, the run on liquidity, the low, and then it runs up. However, whatever, okay, for the year to the high and then back down into the close. So I'm just speculating here. This is possibly the next, this current year candle. So candle wick, all right, open, low, high, close. That's what I'm considering could be the possibility here. All right, just take that out so we know what we're on about here. Yeah, so the question is now, this point of control, if that gets taken out, you've got to consider these levels there as a possible target. Well, you got other levels as well. We could go to a 4-hour chart. All right, just be careful, guys. It's we just really need to let this show its hand, right? So we're at a critical level. So you look at the volume profile. You've got these potential targets through here. Okay, just looking at that, the high over here, which coincides with. Back in here, these would be if this breaks the low. These are targets that I'm looking at, and I mean, it wouldn't even, it wouldn't surprise me that we see it tank and possibly even look to take out sell side liquidity that could be resting under here. At the moment, I mean, look, it could hold here. It could hold, and it rallies from here. That's a possibility. But don't forget what we looked at before. This topping. Price action was starting to look pretty weak through here. It's not a strong trend. Look, high, low, higher high, lower low, higher high. Be careful. Yeah, just watch out for this, guys. So, this week is going to be the week that I guess this shows its hand. It's either going to trend, it'll hold and we get that, or no, we get that. And right now, I mean, there's no trade. I would be sitting back waiting to see how it reacts around this point of control. Big green support zone right there. And, I mean, look, if it rallies after this, good job. Then we can look at the currency pairs. We could possibly consider gold could weaken if the stock markets rally. Now, if the stock markets tank, gold's pulled right back. We could see an opportunity then to get long gold, I would think. All right, but we've just got to give this a little bit of time to show its hand. Everything else is tanking. I mean, metals, Bitcoin, you name it. Okay, so the risk assets, Bitcoin, the indices, stock markets. Stock markets are definitely risk off at the moment. So just be careful. Now, if you're looking for a currency pair, if it's risk off, you could look for a possible, possibly strength coming into the Swiss. Not so much the yen these days, given that the Bank of Japan has raised their rates, so that Japan safe haven currency thing that we used to rely on in the past is now kind of shifting ground. But definitely the Swissie. If this tanks, if this breaks under here, I would be looking for Swissie pairs, possibly a strong Swiss, and currencies like the Aussie, commodity currencies, New Zealand, possibly weak against the Swiss. If this tanks, if this holds up here, then well, it's a different story. All right, guys, look, I mean that's my take on the US500 and it's the same story. We look at the NAS; it's fairly closely correlated, but come back to this because this will be a bit of a guideline in terms of where the markets could be heading, and look at it from a risk on and risk off perspective. Risk on, if this rallies, money will pour into the stock markets. Gold could drop. Risk off, if this tanks, then money could move into gold and silver and what have you. But we need to see this drop for the metals to gain. It's a very precarious market. I mean, gold has tanked. This is tanking. Bitcoin's tanked. All the assets, risk assets are tanking. I mean, yeah. All right. Look, I think that's my take on the US 500 at the moment. Love it if you comment. Let me know what your thoughts are. Let this unfold. Let it show its hand, and then we'll see some opportunities come about. Okay. With that, have a great day, and I'll see you in the next one.